Hey guys, what's up? Hope you're doing good. So these were the two trades that we took last week inside the community. I actually explained this trade last week inside our course, ICT Advanced Smart Money course. And so I think it was Tuesday when I took this trade, right? And then I recorded the video on Tuesday, so we're somewhere here. And this trade played out beautifully. And then the next trade did play out handsomely as well. And I actually did explain to you the top-down analysis, starting from the monthly charts, going down to the weekly, the daily, the 4-hour charts, to why that was a setup that we took. All right. So this whole top-down analysis is what we call ICT Smart Money Matrix. All right. So we basically started with monthly charts. What we're seeing here is, so this rejection over here, this is the monthly chart, okay? We take the wick, and that is going to be a rejection block. This is called rejection block, okay? And we are going to dive deeply into these concepts inside our ICT Advanced Smart Money course, but let's just leave it at that, okay? This is called rejection block, and then we see the price actually did reject from there, okay? So the monthly chart took the liquidity, this liquidity pool over here, our previous low was ran through, and then we created this rejection block, which made price reject from there, okay? And then what we saw was, because we took out the internal range liquidity here, we should see price actually run through these previous highs, which is exactly what we saw here. So this candle closed above, it disrespected this order block, which in turn makes this or turns this into a breaker block. Okay, so from there we shouldn't see this level being violated. We should not see that. We should see price actually run towards the next targets, which are going to be the next liquidity pools. And remember, this is still the monthly chart. Then we went down into the weekly charts and we saw price action in more detail. So this was the breaker block based on the weekly time frame. We take the body of the weekly candle, and do you see how dynamic the response, the reaction is from there? This candle wicked into the mean threshold of this breaker and then closed above it, okay? It closed above the mean threshold of this breaker block, of the 0.5 level of this breaker block. And then what we saw was displacement. So this was the next impulse, which shows to us institutional sponsorship. It shows to us that this is basically what the interbank price delivery algorithm printed. It shows institutional willingness to move price higher. Then we were seeing here that this very last bearish candle was the order block. This is the weekly order block that moved price higher. So we shouldn't see that level being violated. We shouldn't see price disrespecting this order block and the wick of this candle to the downside. We then moved to the daily chart, and now we can make the order block more specific. Because why? Because we're actually seeing the price action in more detail. So while the weekly order block was at this level, we actually see that the daily order block was here. So this is still good, but the problem with that is it's not going to enable us having precise entries. Sure, I could have an entry like this based on our weekly charts and then put my stop loss here, but I'm going to wait for weeks and months for this trade to play out. So I don't want to get into the trade there yet. I want to get more detail and more data and information about how price action actually looks like in the lower time frames. So this is the daily order block, which now should not be violated. And we're actually seeing price respecting the wick of this order block and then giving us the next displacement. Okay. What we're seeing then is, I explained to you what the differences between external range liquidity and internal range liquidity. Okay. So we said that once we get this impulse, we have created relatively equal highs here. So this is going to be printed, and that's going to be our next target, because the algorithm is going to want to take that external range liquidity. Why external? Because it's outside of this whole range. Anything inside this whole range, this low, this high, that's going to be internal range liquidity because it's inside the whole range. And we said price is going to seek internal range liquidity first and then move towards external range liquidity. Once we see this price delivery, what we should see is price actually looking to take out the internal range liquidity to enable the next move. Okay, so price has to balance itself out. We need the retracement first in order to see the next wave, the next move, the next impulse, the next price delivery or expansion. While price was giving us this retracement, we actually saw this is the daily chart. This is the daily chart. When we go down to the 4-hour time frame, what we were seeing here is basically this first leg of the retracement of the correction. We're seeing new internal ranges being printed in full. Okay, and we're seeing, so this is our internal range based on the daily chart, but on the 4-hour time frame, this is the range we're seeking a balancing out of price. So we're seeing that price actually seeks internal range liquidity and then targets the external range liquidity. Then we're seeing that price taps into the lower time frame fair value gaps and then giving us the next move. Okay, so we're seeing here a fair value gap. Price just taps into it and then targets the external range liquidity. Okay, once we're in this daily order block, do you see how precise this stuff is, guys? I hope you realize that you basically didn't know anything. You didn't know until now. You didn't know anything about what you were doing. Okay? Do you see how perfect and precise this whole thing is? Inside this order block, we create a new order block, which is this candle over here. Why? Because this candle validates this as being the next order block. Displacement. We were seeing price coming back into the order block. Boom, the next displacement. So this candle validated that this bearish candle is now the next order block. What are we seeing? We're seeing that price taps into the order block and then displaces. So this is now the next order block because it's validated by this candle. Order block, price action to the upside, retest of the order block, boom. All right. So this is how we identify our daily bias. Okay. So if we see something like this, price tapping into this order block, the daily bias for this day, before we take any trades, so this is Thursday, July 30, what we'll anticipate, what we'll expect is for the next daily candle to be a bullish one. Okay, we're going to get into the daily bias inside our course, but because we tapped into it and then we saw this rejection wick from this order block, it's 90% that the next candle is going to be bullish. Okay, and then what we're seeing afterwards, we're seeing that the same thing. This is now our new order block, expansion back into the order block to the upside. This is now the new order block, price retests it, expansion. This is now the next order block, price retests it, expansion, until we take out this internal and daily internal range liquidity. All right, good. Let's go down to the 4-hour time frame. We basically saw the exact same price action here on the 4-hour time frame. I hope you see, guys. I hope you see how this price action over here is basically the same price action that we saw in the daily charts. Do you see that? Do you see how beautiful this is, guys? This price action in the 4-hour time frame is basically the same that happened here. The algorithm is printing these candles and engineers buy-side liquidity. Okay. Then we see retracement. What does price do? Seeks internal range liquidity with this move. And while giving us this move, we're basically seeking internal ranges. Internal range liquidity. Okay. And then we're targeting these highs over here, which is going to be our internal range liquidity based on the daily chart. This price action is what happened here inside the 4-hour time frame to the perfection. Okay, the exact same thing happened here. We had an impulse, a relatively equal highs were printed. That's going to be our external range liquidity that we're going to target. And then we saw this correction over here, but while giving us that correction, we're seeing fair value gaps being printed and being respected. Okay, new move, fair value gap to the downside. All right, the reason why the price action is basically similar, basically the same, is because price is fractal. Okay, price is fractal, meaning whatever happens in the monthly chart, in the weekly chart, in the daily chart also happens in the 1 hour, 4 hour, 15 minute, 5 minute, 1 minute, 15 seconds time frame. Price is fractal. Okay, so what we are basically building here, okay, is we're trying to build up a layered understanding of price action. We have different layers: monthly, weekly, daily, 4 hour, 1 hour, 15 minutes, 5 minutes, 1 minute. So what we can do here now, the exact same way, what did we do with the weekly and daily time frame? We said this was our daily order block. What did we say? We said, I don't want to just enter a buy position here because that's going to take ages. So I want to see more price action, more detail, and actually I want to identify the daily order block. That's what we said, right? Now, we do the exact same logic. We apply it on the 4-hour time frame. What we're saying here is, because the 4-hour order block starts here, this is the 4-hour order block, okay? I don't want to just enter a position like this because that's not a precise entry. What do I want to do? I want to go down to the 1-hour time frame to identify what the 1-hour order block, where it is located. I'm seeing here the 1-hour order block. I'm seeing price tapping into it, and then it's giving me my next move. And this would have been a perfectly valid setup. It's the same thing, guys. The same thing happening over and over again. Let's just zoom into this area and see if we can identify order blocks over there. So let's just go down to the 15 minutes time frame. Now it's basically the same. The 30 minutes time frame is going to be enough. Order block being validated by these candles over here, that this is indeed our next order block. Price taps into it, respects it, and then moves to the upside. Order block being validated by this candle, price creating and engineering sell side liquidity by this fake low, comes back into the order block and then gives us the next move. It's the same thing happening over and over again, right? This was our setup last week. Order block being validated by this candle over here. Price engineers buy side liquidity. We have relatively equal highs so that we know that those highs, the external range liquidity of the 1 hour time frame, that external range liquidity is going to be targeted over here. But we need internal range liquidity first. That's what we need first. Internal range liquidity. We see this candle, this black candle, looking into the order log, taking out the internal range liquidity to then take out and run through the external range liquidity based on the 1 hour time frame. Okay, that was the trade. I hope this helps. And I want you to understand, guys, how precise and how scientifically we approach the markets and the charts. Okay, there's nothing like this in the entire industry. This is ICT, so obviously ICT is the one that teaches this, but it's like hundreds, thousands of hours of lectures. What we're trying to do here is basically trying to simplify this for you guys so that you can have an appreciation and then also obviously learn price action this way. Okay, this is how price moves. I hope this helps, and take care and good trading.